Well, hi there. Welcome back to my YouTube channel, Kites Swift Moves Trading Academy. And so today I want to talk about a slightly different approach to you doing your charting analysis. And so this morning, and it's a great example of it too, is I'm looking here at this is Apple and this is pre-market, as you can see. It's about 7:42 a.m. in the morning here in Florida on Eastern time. And I'm looking at Apple, and if you look at this action right here, right, I don't think it takes a real rocket scientist to figure out this is just chop, 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 chop. Now I'm on the 1 minute time frame, so let's take it up to 15 minutes and let's look at it. And yeah, still kind of just looks like a bunch of chop to me. 5 minutes. Look at that. Okay. So let's go back to this 1 minute. So what's the approach we're going to use here? Because a lot of people, when they see chop like this, okay, all right. So let me back up a step. When you're looking at your chart, the first thing you want to do, along with a few other steps, obviously, looking for the news, looking at the news, looking, overall market conditions, is you want to look and try to figure out what, if you're looking at a security, what is it, what mode is it in? Is it going up? Is it going down? Or is it going sideways? This is sideways. It sure looks sideways to me. So what can you do with that? Can you trade it? Well, yeah, you can. Um, this is something I did yesterday. So if you take this rectangular tool here, and what we're going to do is I'm going to look at this overall range and do something like this. Now, double click on that, and I'm going to set that to like a darker gray so I can see it well. Okay. And so what you're going to find is price is going to bounce in between this. And that's what you have going on here. So let's do this. So you grab this tool, or excuse me, grab the price range tool, and you look at what's the range on this box that we just put. $1.42. So so basically 0.7 is what you're looking at for half of it. So we'll go say 0.72. Okay. So now you grab this box here again, and I'm going to grab this, and I'm going to set this other. This is like a range by like a demand zone, right? Just like we've done before. And now I don't want the same gray as I did over here, because I did that so I could see the overall. So on the bottom, I like to go with the blue. And up here on the top, I'm going to go with the red. I went a little further past there because it makes it sometimes a little easier to grab it, when the boxes are shaped slightly different. All right. So there's your chop. And as you notice, now is it going all the way both directions? No. Now you could sit here and change this zone and try to get a little more fine tuned, but like here, this is pretty close to the outer side of this zone, and like this one here, and then this one up here is right at heading towards the outer zone. So how would you trade this? All right, if this was the opener, all right, and I'm going to expand this just to make it a little easier to see. All right, and I'm going to make sure that right in the middle. Okay, and now that I can easily grab these, I'll even them up. But say this was the opener, boom, right now. 9:30, bell rings, and this is where I'm at, and this is what I've been tracking. You're right in the middle, so I would let that play out, meaning it's going to either continue to go up here, like this. Here, let me do this. It's either going to keep doing this number, or let me get rid of this, or it's going to go like this. Whoop, man, come on, Jerry. Some days, man, some days it's going to go down like that. Okay, it's going to do one or the other. Let me get rid of this thing. So right now it's pretty much right in the middle. Now, again, say this is the opener, the bell rings, and like right here, it can say it continued down here. And it gets down to, right about somewhere between here and here. Okay. Then I would jump on that, and I would, meaning, all right, it's coming down, then all of a sudden, say that candle turns like here. I'm using black and purple. So say that candle turns purple. Maybe on your chart, it's probably green. And as soon as that starts to turn green, I would place a call. Okay, meaning I believe the price is going to go up. Now, when you place that call, when you're trading chop like this, you have to be prepared to instantly trade out of it if you're wrong. So, say it gets down here and it starts to turn, for me, purple, you green, and you jump on a call, and it keeps coming down. And what I would do is, if it breaks that barrier right there and continues down here, kind of like this, say it did this number, but it keeps going down and it does that, it breaks past that barrier, then I would get out of it. Matter of fact, I would probably get out of it a lot sooner. So that's the whole key to this type of trading, is that if it's not going in the right direction, don't wait it out, get out of it. That is my suggestion. See, like right here, that was looking like it's going down. Look, now this is in the pre-market. Hey, it's starting to head up. Okay. But the point with all this is, let it ride out to either, if it's going up to around here, and then place a put. If it comes down to about here, place a call. All right. And what's your potential gain on that? So let's say it gets up to here, and you place a put, and that put ends up finding its way down here. Now it's not going to be one candle, probably be several, just like here. Boom, 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 heading down, right? But that's $1.04. All right. So what does that mean to you gain wise? Now I use this spreadsheet I have to estimate that, and let me go back to that. What was that? $1.04. Okay, so if I plug in $1.04 on one contract, that's $52. If you had 10 contracts, that'd be $520. Now you got to ask yourself, and I'm not telling you what to do. I'm just showing you an option for, or excuse me, an alternate means of doing chart analysis, to think of ways that you can pick up easy money. So let's say you look at that and you say to yourself, I believe when I get up to here, I believe that's going to go down. And you know what? Looking at what's been happening in its previous history, recent history, really good, strong possibility that that's what it's going to do. Now, at the opener might surprise you. Okay. So let's say this was the opener and it starts going up, and it gets up to about here and it breaks through here. All right. So then ask yourself, then, all right, what would you do? Because I know if it were me, I would place a call at that point, because it's breaking out. It's market, it's breaking the structure, and it's looking to break out. So ride that wave. I mean, this doesn't take a whole lot of energy to consider what you should do. Okay, but let's look at this. Let me stretch these out for us. See how this went up to here? Now look, it almost looks like it's getting ready to head back down. I can't quite tell. That one's still purple, but who knows? But anyways, yeah, okay, no, it is glowing up. So we'll watch that thing. But I got a feeling you're going to see it's going to go up to somewhere right around here, and then it's going to start working its way back down. So let's say you got the buying power and you buy 10 contracts. And 10 contracts, and let me see if I got this. Oh yeah, now this is the duration. So let's say this was you right in this area right here, and this started to turn around and you place this put. All right, that's 10 minutes time. So imagine if you make $500 in 10 minutes. How does that sound to you? Sounds pretty good to me. It's a pretty good hourly rate when you think about it. And how hard is this to calculate? I don't. To me, I don't. I think it's pretty simple, really. Um, you tell me, because I think it's pretty straightforward. Get rid of that arrow. Anyways, so this is just another technique or strategy, okay, for how you can make money in the market. It doesn't take very much movement in the price action, right? In the price action of a stock. It doesn't take very much movement for you to make some good money if you have multiple contracts. Now, how do you know how do you have multiple contracts? You have to have the buying power. If and I haven't looked at the price yet today, but if you got the price to buy 10 contracts, you might want to think about it. Um, I think if you look at this and think about it long enough and hard enough, you're going to realize, well, this is a pretty good trend. I mean, again, that saying, the trend is your friend. Well, don't go against the trend. If the trend is chopping, well, then chop with it. But you don't have to disregard it. Now, I know some people, they're only looking for one or two trades a day and they want super crazy big action. And that's great. When the setup's there and it's available to you, yeah, go for it. But if you got the extra buying power and you're just sitting there staring at the charts, waiting for your ideal setup, well, why not make some extra money while you're doing that? So that's the point of all this. So anyhow, I hope you found this helpful. Now you could use the same technique. If it's bullish or bearish, meaning it's going up or it's going down, and it's just it's where you select your range. You're gonna have to be careful with that and understand what you're looking at the chart. And we'll make another chart to look at that and do another video. But the point with this is you're going to find a lot of times a security will be chopped. That's what they call this. It's chopping because it's not really breaking out up. It's not really breaking out down. It's just sideways. And okay, well, if the securities do that a lot, why not make some money? Now, if you don't have a lot of money in your brokerage account, the other thing that you can consider doing is maybe buy 2 contracts. All right, you're not risking a whole lot. You're not going to make a whole lot, but look how many times you could have done it. You could have done a 2 contract here, 2 contracts here, 2 contracts here, and and you're only talking a few minutes, right? And again, what's key to this is, as you can see, a couple of minutes, it's doing its thing. So when you see it start to turn around on you, like here, if you got down to here, and all of a sudden you jump on this call action, and you got up to here, and all of a sudden you see the darker candle, right? Like for you, probably your red candle. When that candle changes color on it, get out. If you did that, let's just say you did this right here. All right, 39. Well, let's see what that is. Okay, and you had 10 contracts. You could have made $214 basically off of one candle. That's 1 minute. I don't know how else to put it to you or how to make you see this, but there's good money there to be made. And so you don't. Now, granted, you're not making thousands unless if you got if you have a lot of money in your account and you have the buying power to secure more contracts. But I personally, I wouldn't do that. I would maybe go maximum 10. And again, you're going to have to be fast at getting out when it's going in the opposite direction of whatever kind of trade you place. But is this difficult to understand? You could sit here and ride this up and down all day long. Couple hundred here, couple hundred there, couple hundred here, couple hundred there, and it all adds up. At the end of the day, you got a nice green day if you've been playing your action right. So, anyways, I hope that helps. Have a great day. Bye now.